Let's talk about dollar weakness and yen strength for a change, shall we? What do you make of the recent dollar weakness here? Does this look as if it's building towards some kind of global intervention?
I'm not sure if there's going to be some global intervention. Obviously, there's a lot of speculation on that front, given the Federal Reserve Bank of New York were the ones who did the rate checks in Friday in US time. That isn't unprecedented. It is rare, but it's not unprecedented. I believe the last time was 2011 after the earthquake in Japan. So it has happened before. Now, it was a little bit unusual here because they did say explicitly, we want everyone to know about this. And that's not normally how it happens. Normally, they're happy when it gets leaked because the whole reason you do a rate check is to scare the market. But officially, they have confidentiality rules. So it was a little bit unusual here how it was delivered, but I'm not yet convinced by the full or some of the speculation out there of a Plaza Accord 2 or whatever you want to call it. It's definitely a real possibility. I'm not trying to dismiss it out of hand. I just worry that, you know, we need to find out more information. I wouldn't want to run too much of that speculation just yet. That said, the dollar's got enough reasons to decline on its own. The quiet quitting of US assets is going to only intensify at the moment. The fact is, the US is a country with a current account deficit, a large debt problem, the currency is expensive, and you've got an administration that is doing policies that continue to undermine its trade and doing business with the country. The world is overexposed to the dollar, and at the margin, they're going to reduce that exposure.
Mark, I am stunned this morning that I'm not seeing volatility showing up. Like the VIX is at 16, Move Index is super low. Equities are being, like they sold off overnight in the US, but they're getting bid back this morning. Is the market just looking past all of this in certain asset classes? Why am I not seeing it having a greater effect?
I think one is those weather photos you're showing, the low liquidity out there. You've got a holiday in India, a holiday in Australia. There's definitely low liquidity, people waiting to react. And we are seeing extreme volatility in some assets. You take precious metals, for example, that are completely and utterly bonkers and definitely moving around. But you're right, equities have been relatively strong. One of the big dynamics at the moment is, and this is plays into the whole counter argument to the quiet quitting US assets, is there isn't that liquidity in a lot of these other markets. And that's why we've seen things like the Kospi and precious metals go bonkers. People want to get out of US assets, but there's only so much liquidity, and so people have got to take their time. So I think that's one of the reasons why we're not seeing too much equity movement. I was expecting a little bit more today, but as I said, in the short term, there has been some liquidity issues that are quieting markets.
Mark, on the US, the critics will say we've seen bullying on the international stage, state-sponsored violence in Minneapolis. Does the US have an image problem? And is that also reflecting in gold?
I'm worried about using the word an image problem, but I guess that's right. I think that the rest of the world is suddenly questioning how much they've been dependent on the US economy in the post-World War II era. And that's benefited much of the Western world, but I think people are really questioning that. And obviously you're seeing the Danish situation at the moment where an app to get non-US sourced goods is one of the most downloaded apps locally. You're seeing the Canadian situation that despite the threat of 100% tariffs, they're seeking to pursue more trade deals with Asia. So certainly people are trying to align themselves away from the US, yes.